Good morning and welcome to the turtlefollower.com, where we teach you how to stop predicting and start reacting. My name is Steve, and in this video we're going to take a look at the stock market for Saturday, January 2nd, 2016. So first of all, I want to wish everyone a happy and healthy new year. We're starting the year off fresh with a clean slate. So anything that's really happened in 2015 is just the past now. So we're really looking at the future here. With that said, lots of things planned for the turtlefollower.com. We're working on the TTF University. We continue to update that. So if you want to head over to that, you can sign up for a free membership where you can just get access to the TTF University. Or if you are a premium member, you can get access with your existing membership. I have a bunch of interviews planned. We're working on getting everyone lined up. Have a couple new blog posts planned. So definitely looking to advance the website this year. Again, thank you for everyone who's supported me throughout the whole process. This site has really grown into something more than I ever expected. And I'm excited for seeing where we go in 2016. With that said, market-wise, we ended 2015 how we started it. We're just choppy. We looked like we had a breakout on Wednesday, Tuesday, after a nice little consolidation move, and sure enough, on Wednesday and Thursday, that move was taken right back, all right, by the bears. You can see that nice move here on Tuesday, and then boom, boom on Wednesday and Thursday. So we're kind of still in that same predicament. Where everything looks like. We were looking at this as a breakout, potentially testing 2100, and again, not enough buyers, or just because of the low volume, it's been a rough couple week or so. So we were looking to continue. Instead, we fell right back down into the range. So now looking at the S&P, I still say the same thing. We either have to break 2100 or this 1990 level. All right, those are the two areas. And until one of those happens, you just have to anticipate that these moves are going to continue to happen. All right, we're not going to get these moves where we see a breakout and we continue, or we see a breakdown and we continue. It's just choppy action, and that's really just because we're in a range. So until this range breaks, I would say that is probably the path of least resistance is just sideways. Now 2016. Depending on what happens come the start of the year, first trading day, we could see a lot of buying come in. Money managers trying to get in stuff that was sold off during the holiday break. Remember, a lot of these guys, these managers, they're not really trading, and that's why you're having this low volume environment. So you're not really seeing a lot of the trading happening. But at this point, I think we just have to wait and see exactly how this week shakes out. If we look at the SPX, okay, you're going to see a similar pattern, all right, where we had the breakout, then it looks like we're falling down. All right, remember we've talked about this little downtrend channel. We have key support down here at the 2000 level, and you could see the declining resistance line. All right, so again, this one now looks like maybe it wants to continue lower. All right, come back, test that 2000 level, just the way that this looks here. Remember, we wanted it to consolidate in this range before breaking out. Doesn't happen. But again, if you look at the weekly chart, all right, what are we in? We're just in the same range that we've been in for most of 2015. So again, I think we just have to wait and see which way this breaks. But until either side of that range breaks, you just have to assume you're going to see more of the same. All right, the NQs, all right, down 1.5 or 1.15%. So these were hit hard on Thursday. Again, I'm not too sure how much we're going to be putting into how much conviction we're going to be putting into these moves that we had on Thursday. It was New Year's Eve. I mean, I was actually surprised. I thought the market was closed or it was only open a half day. I was surprised to find out that it was open a full day. I don't think that's really been the case in the past, but I could be completely wrong on that. But either way, you could still see the same range, 47.31, lows of that range, 44.75, till one side of it breaks. Again, similar situation to the S&P. We're just going to see this choppy action. And here you could see the NASDAQ composite. and again 51.62 and 4900. All right, so again, just sideways movement and not really much else going on in that index. I mean, you really can't say too much about it. I mean, we've been in this range for 3 months now. There's only so many times that you can think it's going to break out before it starts to, before you start to realize that it really isn't. And the time, I guess, that everybody thinks it's going to reverse, and the time is going to be the time that it doesn't, I guess, is what we're trying to get to here. Dow down 176 points on Thursday. Okay, and you can see still in that same range. All right, 17,800, 17,000. Coming into trendline support. All right, that's where we pretty much stopped, and it had a slight reversal on Thursday. But again, this all depends on where the market decides to go. We're still in a range in all of these indices. All right, every single one of them is in a range. All right, you can see the same thing here. Dow, the actual Dow Jones, the DJI. All right, 17,930, 17,220. All right, until one side breaks and continues to break, you're just in a range. And it's choppy action. For a trend follower, from a trend following perspective, it's very difficult action. All right, this is the action. You would either want to see us trending down, where you could be short and be consistently short, or you want to see us trending higher, where you could be, consistently long. Right now, you're not getting either of those. Here you can see the rut. Again, on Tuesday, we were testing the 50-day moving average. On Thursday, all right, looks like we're breaking down, heading to new lows. This maybe is a lower high in the DJI. I'm sorry, in the rut. All right, we're actually looking at the Russell futures. Sorry, but you can see there's maybe a downtrend line. I mean, there's so many different ways you can draw this. It's just unclear at this point. And I'll be the first one to tell you, I'm not going to sit here and bullshit you. There is no definitive way right now. All right, we're just in choppy action. And if somebody's going to sit there and tell you they're going to know the next way that the market's breaking, they're lying to your face. Plain and simple. All right, so I hope you guys appreciate the honesty. I at this point, I'm not here to know everything. I don't know anything really with prediction. I have no clue. I mean, I just give you my best possible thoughts, and based on price action. And right now, price action to me is telling me it's a coin flip, honestly. So I hope you can appreciate the honesty, and go from there. But here, looking at the Russell, again, looks like that lower high maybe in place. Maybe this leads us lower, and we've talked about this in the past. We've talked about this on the weekly chart, maybe being a consolidation that breaks to the downside. Okay, so this looks like more of a top than any of the other indices, the ES, the NQ, or the YM. So S&P, NASDAQ, and Dow. This one, the Russell, looks more likely to be a top than any of the other ones. But again, we're still in this large range between 1,200 and 1,100. And until one side of that breaks and holds, not really much else to do. So we're going to keep this one short this weekend, really just because there's no real point to belabor this any further. I mean, we're really not looking at anything. As far as our portfolios go, we haven't closed out of any trades in either of the portfolios this week, so nothing new to report on that side of things. Usually if we close out of a trade or two, I'll go over it with you guys just so you can understand our process and why we closed out of the trade, and how we're managing these trades. So hopefully it gives you a little insight into the premium membership, gets you to maybe become a premium member, where we really teach you how to trade. This side of things, the free side, is really more about educating yourself, understanding what and why certain things happen, and that's part of the TTF University as well. So nothing really new to report there on our weekly watch list. Just real quick, I think I had one new trade set up, and I'll go over that real quick with you. That trade setup is in Philip Morris, and I mean, it's a good trade setup. Don't get me wrong, it meets all of our criteria. It has a 1.5% yield. It's trending higher, looking like it's going to be breaking out of a weekly and daily pattern. So that's exactly what we look for. I take my scans that I do. I run a scan every single weekend. I take about 150 stocks, and I pare it down to the best 30 or so. And this week I had not really much going on. I didn't really take many off the list, and I didn't really add many onto the list. This is one that I did add onto the list. I think if I remember correctly, I did it yesterday. I think there was a total of 2 new trades or setups, and one of those is Philip Morris. So just to go over our process a little bit, what we're looking for is stocks that meet our criteria for potential trades. Our trading account trades are usually set up by 52-week high and 52-week lows, because I don't like to trade against any resistance on those. I like to see them break out to the yearly highs and lows, just to provide as little resistance as possible on those trades. For our core account, we go through the watch list. We look for ones that are setting up. Obviously, I love to see when they're also hitting 52-week highs. I try not to trade them too much when there's significant resistance. But PM was one of them. You could see on the weekly chart on the top here, been in a large range between 91, Jesus, 91 and 75. All right, in that larger range. Now looking forward to breakout. If we do get a breakout, we're going to see some resistance around 96.50. But you could see here that we are setting up on the daily chart for that breakout. So we don't like to take the trade based on a weekly breakout only. We like to see confirmation on the daily chart. So this would be a trade setup if we can break out over, let's call it $90.50, maybe 91. And a stop would be right around 85.75, 85.50. And that's all we do. We manage that trade then. If we can get in it, we'll enter it on the following day's open and look to try and get in it and ride it for as long as possible. Remember, I said we're going to probably see some resistance around 96, but if that resistance doesn't hold, then we could easily see $100 in this name. So that's one of the new setups that we have for the premium members. If you haven't become a premium member yet and you want to give it a shot, head on over to turtlefollower.com, sign up for a premium membership. You get a 30-day free trial. Just to try it out. It's a new year. We're not really running. We just had closed our open house. So now we're kind of going full steam ahead. So again, if you want to try and get in on that, definitely head on over to the turtlefollower.com, sign up for a membership, and you can join us in the members area where we're going to have 2 new videos out today, and then we issue trade setups throughout the week. On any of the potential weekly watch list names or 52-week high, 52-week low names that may trigger and meet our criteria. So lots to do in the premium membership, and hope to see you in there. Other than that, that's it for this weekend. Again, not much to report, just really wait and see mode, and we'll catch you during the week. Have a great rest of the weekend and a happy new year. Take care.